senior journalist, India editor, Central European News. Welcome to Insight,
Thank
Mr. Guhare. Mr. Chawla, I'd like to begin with you. Before we come to the implications of the falling rupee.
About $190 billion, and this year it might even cross $200 billion. So we have a huge, and there's a problem. Huge on everybody, on a common man, on a business, across the board, because we are a net import driven economy. That's the main problem. There's a huge trade deficit, close to $190 billion, might be even $200 billion. We have the flight of capital back to the US. We had a good party last year, mind you. We had a good party last year, but party has to be over. It can't go on or on. So structurally there's a problem. Okay. Problem, and then we have not really depended too much on the what is called the safe money, the investment, the investment by kind of, and then we have not really pushed exports to the extent we should have done.
Okay, we will talk about the steps the government. Dr. Yamini Agarwal, how do you look at the current situation?
See, the current situation is a coupled effect of what's going on internally. You know, we are at one of the lowest growth rate levels presently of the last entire last decade, which is about 5% of GDP. And we have been trying to motivate either the industry, the agriculture, and the grow at a faster pace. Even the 12th Finance Commission, the 12th Planning Commission report says that we are looking at 8%. So from 8% we have dropped down to 5%. Right. An IIP index of about 2.3% for the April month. Factors which do not promote or give confidence in our economy. What has further also happened, internal problems over there. As regards the other Asian economies, whether it is China or others, we are doing fairly well, because if at 5%. So when and internal factors together, the fall of the rupee seems to be close. Another important aspect which I feel is been unable to communicate, or let's say a policy framework to the international investors, whether it is with respect to the Vodafone case, whether it is with respect to the IKEA case. Where are they giving a clear-cut indication that even the Jet Etihad deal, it is seeing a lot of difficulties. So the foreign investors are not very by different authorities in the government to have different stands. Even when
we are an import heavy nation, so obviously we depend on a lot of dollars to buy stuff. If the dollar is going high, a lot of stuff have happened which we have to spend more money. Let's say oil. We are a hugely, heavily oil import country. The Brent has been on a 3-month high, more than a 3-month high.
right.
So obviously it is impacting our economy very badly. As Dr. Agarwal rightly said, the government hasn't taken any proactive steps to assure we could clear your proposal fast and what can happen. The latest Etihad deal. Now, whether it was a 48-hour issue which the newspapers are highlighting as if there was a huge rush, or whether there are other issues to that which probably more investigations bring it out. Somewhere it shows that nobody took the deal very seriously, except those involved. The deal is now completely stuck. Now the PMO has gone in, and there are chances that even the courts might get in there. There was a signal it sends to places like Abu Dhabi in UAE at a time when the government is looking for foreign funds. When you look for those funds which are funds backed by governments, that means you're saying you must come and invest. Chidambaram is going to Abu Dhabi and UAE next week. If he goes there, I think one of the ways is, how could you not clear the jet? In the last 1 or 2 years, project that actually says it has gone off the ground, work has happened, and hopefully in a year's time things will happen. So it's a very bleak situation. So that's all adding up to impact the rupee. It's the worst performer. 9 weeks continuously sliding against the dollar.
Right.
And it is a very, very precarious situation.
So it's FIIs
No, not just
accelerating their
FIIs.
pull-out.
FIIs have often come in like what Prakash said, hot money, cold money.
Right.
They come in, they move on. That's what all happens. look at the conflict or look at the loggerheads at the FM and the RBI governor is. Each one is trying to counter each other. I mean, how could an RBI governor give a statement saying it doesn't have a time frame for the currency? The bank is the only one. It has
concerned, it is not him. So there is no way to suggest, I guess, accepting maybe the May month figure of the misnomer. You take a look at the consumer price index and you take a round of the vegetable markets, the edible oil prices, you take a of cereal prices. So inflation is not at all down. Always blame the government because Walmart is not coming, because the government is not coming. Now tell me, they want a clarity. The policy was announced that 30%. You guys have to do 30% of the sourcing from MSMEs. Policy is out, notified. Now, what more? Problem is, you don't want to source from MSMEs. You don't want to do it from us and then blame it on the government. Part of the investors.
Okay.
It's very easy to blame the government.
Okay.
Here, then they again go to Udyog Bhavan.
So you're saying there has been no mismanagement?
I am not saying
of the
that. I am
government.
not giving clean sheet to the government either. What I am suggesting, it is not fair.
Okay.
But I think
do
the
the best.
retail point, one point, sorry for interjecting.
Sure.
One of the biggest
Agarwal also respond to that in just a bit. We have to take a break in the program. Stay with us. We'll be right back. So the question about investment for investments, because whatever investment is coming, we're scaring them away in the gestation period that we take.
First things first, RBI has a limited role. We cannot depend only on, we cannot look only up to strengthening again. These are short-term things. Now, are we suggesting that story is over? No, I won't agree. Are we suggesting that everything is so bad, dismal? No, I won't agree. It is a situation which has emerged out of the global factors, as I suggested.
Right.
It is a situation as also emerged as the economy, investment appetite is not there. People are not willing to take risk. Now you will ask me, then who will take the risk? I will suggest one thing, that PSUs are sitting on a huge cash piles, over 1,000 crores. They are sitting on a huge cash piles, huge piles. Why don't they take the lead? Because they are in the position to lead, take the risk, which the private sector would not like to do it. That is they can really, and once the cycle improves, even the positivity also feeds on it, as the negativity does. So the RBI has a limited role because RBI has only sitting on now close to $300 billion forex reserves, much less than that. There is a limit, because if you, as Dr. Yamani suggested, that they should come out, offload some dollars, but there is a limited way of it. I think what they should do is, they should come very heavily on the speculators who are having good times. They should also think, of course, some big oil importing companies should be given access to the
Yeah, I
forex,
was going to come to that.
so that there is not much of a speculation done, so that middle are removed. And once they send a message that we are going to deal very firmly with the who are playing up and down the derivative market, the message will really go down well. These are short-term measures. In the long term, in the long term, if the about some time ago, we were all crying, the US economy is down, so we are bad. It's all going to end. No.
Okay, so you're optimistic that it's just a phase that is going to get over.
That's
Dr. Agarwal, a weak rupee is certainly going to make imports more expensive. For our exports, it should make our exports competitive. Has that happened?
See, never has the export benefited from a falling rupee, primarily because we are very strongly competitive with the other Asian depreciate their currencies or provide for other benefits which do not provide enough market to help the exporters in terms of increasing their profits. So it's not a very good idea. I would also like to suggest here, it reflects that the Indian economy is not doing well. You know, it is only one macroeconomic parameter. In terms of, you know, what amount of imports we are making, it makes a difference in terms of how much inflation, or in terms of, let's say, what will be the market interest rates or other things, you know. But it is whole indicator of the economy. The economy is not doing extremely badly. It is doing well with 5% growth rate, with bad.
Okay.
Another important aspect is the different sectors have seen a setback. So when we were not doing well, we said we were not doing well because the banking industry, which channelizes a huge amount of, had to see a setback, had to see a large number of regulations. There were sectors like the real estate, see that happening. Though a lot of governments have taken up a lot of projects into the real estate market to provide, you know, township. If you see the recent, you know, the statistics also, it says that the manufacturing. So we are not in a very bad shape. It's not that the rupee is sliding down. So we are in forward contracts and short-term positions which people are taking, which are right now adversely affecting